Good morning, everyone. This is Teddy Kekstadt from Forex Trading Unlocked, and we're here with a Wednesday morning Forex market breakdown for you. And we have a lot of things to discuss. We have on the other side of the pond, we have Boris Johnson to talk about, and we are going to see how that's affecting the pound and the other markets around the world. So with that, let's move on to our disclaimer. I'm just letting you know that this webinar is for illustrative purposes only, educational purposes. And with that, let's hit the economic calendar. So we've had a lot of numbers over the past few weeks, a lot of big economic numbers. This week, it's kind of like a summertime wrap up. We have today, Wednesday the 21st, we have for the US dollar, the FOMC minutes, which all the currencies have been kind of hanging on this FOMC minutes thing today for the past, basically since Sunday night when they opened up. Today we also have the Canadian CPI, which we're going to also talk about the Canada today. There's some interesting things shaking up there. And then tomorrow on Thursday we have, for the Japanese yen, we have their CPI. And then we also have the beginning of a two-day while the markets are open, Jackson Hole Symposium. So the US dollar, as well as a lot of other current, well, the US dollar will be definitely talked about, other currencies as well. I think that except for some knee-jerk reactions off of these numbers today, tomorrow, and I think markets are going to be pretty quiet while this symposium goes on. And then we also have for the euro, the German PMI and the ECB monetary policy meeting that is going on. And then Friday we have the Jackson Hole Symposium, as well as the US Fed's Powell speech that is going to happen. So we have the CPI numbers and these get-togethers. So not too many numbers as a whole, but we do have kind of like a wrap-up from, we had a central bank marathon that went on earlier, middle of the summer, it ended a couple weeks ago, and then we've had the digestive follow-through reactions over the past couple of weeks that we've watched and absorbed, and now this is kind of, I think, the kind of closure to what's gone on over the past month and a half, setting the tone for the fall, because we're about to head into holiday markets in the US, and we also are heading into obviously the fall and the end of the holiday period in Europe, what have you, as well as around the globe. So as the governments come to work and the big banks and everything and everybody starts to come back online in full throttle, we should start to see a little bit of action and volatility kick up, which is interesting because right now volatility has been pretty much dropping because of FOMC minutes, which are today. And I think you're going to have a knee-jerk reaction because this Jackson Hole Symposium has been talked about for the past week and a half globally. So with that, let's look at the British pound US dollar first. It's at our forefront today. We all know that Brexit is something that's been going on for a while. However, something very, very interesting has happened over the past few weeks as Boris Johnson has become the Prime Minister and has started to deal with the various parties in the UK as well as with the EU. So what is going on? Well, today and tomorrow, we didn't have any numbers to talk about for the pound. There are some, but nothing really major. But what really is going on is two things. One is Boris goes to France. It's like weekend of Bernie's. So no, Boris is going to France, and then he's also going to Berlin. So is this a bull or a bear for the currency markets in Europe, for the pound and the euro? I think that besides the fact that they're hanging on the FOMC minutes for as far as the euro is concerned, I think that the pound is going to be kind of stabilized and neutral kind of range trade action for the rest of the week because of what's going on as far as this is Boris's first trip as a prime minister to, well, anywhere to begin with, let alone to the EU and to deal with Brexit. Now, before we start to talk about these numbers, the biggest thing that's come about with this trip is that yesterday, and you can fact check this, I did on multiple sources to make sure I even got this right, and to quote, Boris Johnson put this out on multiple social media platforms and also said this, but to quote, Boris said, the referendum result must be respected. We will leave the EU the 31st of October. So this was his exact words, and he put this out on multiple sources. You can fact check it. I did. It's been in the news. But that's a very bold statement. That tells you that when he goes on his trip today, which now he obviously would be in France, and he's going on to Berlin afterwards, that this is where the line in the sand has been drawn. So now initially here, now we're going to start to look at the numbers. This last low that was planted a couple weeks ago, this was right after Boris had taken the position as prime minister. When he first came in, the market kind of started to neutralize and go sideways. There was obviously a lot of central bank stuff going on, not so much with the Bank of England, because like certain other central banks, they have too much other things going on that playing with their currencies and interest rates is only going to disrupt things. So that being said, we've had a nice little corrective rally that's been going on off this little buy signal, and it's pretty much been that because we're heading into this first meeting of Boris and the EU. Now the EU has definitely put their line in the stand. They really don't want Brexit to happen. They don't want it to happen October 31st. In fact, their whole position is that the Brexit will be a hard Brexit. They are not coming to the table. They're coming to the table, but they're not negotiating as far as the trade deals. And with that being said, as the pound has been weakening for all this time, now it looks like there's a possible bottoming going on. For the mere fact is that this October 31st, and you can see as we have this downward sloping resistance here, it comes right down into the middle of October. So the odds of us going sideways and to lower into that period are probably lesser than going to the upside. So let's look at this, what's going on here. Now we had a short-term buy signal and we are in a short-term uptrend. Yesterday the market tried to sell off hard and then bounced back with a positive close. Now obviously today, this is a recent chart, the pound US dollar is a little bit negative on the day. But if you look at this on a wave theory basis, we had our last lower move low. We had set a high. Now this is hard to see because it's on a daily basis here. But if you looked at it on an hourly basis, yesterday's high took out the high from 2 prior days ago. So that means that it made a higher move high after it made a lower move low. So today's trading is going to be very interesting to see if it can take out the high from yesterday. Then we have this monthly, and we all pivot as well as this prior high from a couple weeks ago. They come in right here. So a breach of this, as most likely the bulls will probably get an accelerated buying momentum up into this critical resistance zone. Now, why is this critical? One, we have the downward sloping resistance for the trend. So right now, we could just be in a corrective move higher. So am I bullish the pound? Am I saying that we're looking for a bottom and a turn? Absolutely not. However, we do have right now a current upside short-term uptrend, even though it's not very powerful. But then look at the momentum to the downside. So it's grinding higher. And I think that right now a lot of your weak shorts will be scrambling in this area right here. So directional traders, I would say that if you're on the long side, yesterday's low for sure would be a great risk level. Definitely anything below this low from the beginning of August, you definitely don't want to be long. I think the trend for there, then we have some very adverse things. So that's the pound component. Then there's the US dollar component. So as far as that's concerned, because the Bank of England is not quite on the bandwagon as many of the central banks and also following the Fed, the US Fed, I think that kind of gives the pound a little bit of weight moving forward over the next few months. So it's hard for this current downtrend, I think, to continue to pressure in a very hard way. If anything, it would be a sideways to lower trade, not quite as severe as a downtrend like we've had over the past few months that was leading up to Boris Johnson's becoming the new prime minister of the UK. So that being said, we look at this 121.95 to 122.09 area. This is our critical resistance level where I think that we are probably going to see a challenge of this over the next couple sessions. And then above that, then I think that this is area here around 123.08 up towards this 123.83 area would be probably the capper, where we have this, because we have this downward sloping resistance, we have some monthly pivots, as well as by that time, you're looking at a very long, drawn out, grinding corrective rally where we'll probably see a pause, as well as the fact that September 1st is also the first deadline for Brexit. So the reason they're going, Boris is going to Europe is to talk about these things. So we have this economic symposium that's coming at the end of our week, which are definitely going to talk about the things that are happening today and tomorrow in the EU. We also have the FOMC minutes FOMC minutes that are coming out today that I think, like I said, I think are going to be just more of a knee-jerk reaction and not very overreactionary. So we have these arrows here. So right here, directionally, I think above this little area here of 122.09, you're going to see a little bit of upside pressure. I would say as far as longs, though, definitely be very leery. Anything below the low from yesterday, and without a doubt, this low at 120.19, anything underneath there, the bears are going to be overwhelming the trade. Or momentum, that means there's probably some sort of, well, more of the same going on with the EU and with the UK. But like I said, we have Boris who drew the line in the sand. And it seems like he's very staunch on that, and we will see what goes on with that. So with that being said, we have US dollar weakness starting to look and show its signs in the pound. Now remember, the pound is one of the biggest currencies out there. The dollar index has still been strong, and it looks like, especially if we can get this breach of this area, what does that mean? It means we probably are going to start to see a turn in the dollar. And that is something that we've all been looking for a while, just because of the strength. It's like the dollar seems to be a raging bull without being supported for any reason, which doesn't make any sense. So let's move on to the next chart and talk about the euro, since we just went with the pound. So now what goes on in the euro, the US dollar? Okay, so we know we have a couple numbers that are coming out. We talked about that. And we have obviously Boris coming to town, to Berlin. And yesterday, interesting enough, we had a bullish engulfing buy signal. The low yesterday made a slightly lower low. So we have, if the signal is correct, then this recent correction that has occurred over the past week and a half should be coming to a halt for at least a few days. And now, because of the FOMC minutes and because of the Jackson Hole Symposium, it's very likely that a range trade would develop upward. I mean, you can see today's range has been very tight so far. And even yesterday's range wasn't very big. So this positive buy signal means that obviously it's looking for upward momentum to build. However, expectations, because of what's going on in the market, I would say be very leery of seeing any type of radical move to the upside. So I would key off of yesterday's low here at around 110.64. Obviously, a failure here would mean negate this short-term buy signal. Now, there's this bullish engulfing line. It looks, now it's in perspective, it is the right size and it is a good signal as far as the fundamentals of a bullish engulfing buy signal. The market was breaking for a couple weeks into this signal. It had planted that low, so the numbers are there for it. However, the ranges aren't there. So what's your risk reward? I think right now, directionally, you have a very low risk trade for longs if you got in yesterday or today. However, your expectations to the upside, what are they? Normally with this signal, it would put you up around this 111.5, challenging this 111.81 area, which would put you right into this downward sloping resistance. And for a corrective move on an overall bearish trend, that would kind of look like a nice little swing trade. However, because of what's going on in the market the next few days, sometimes you can't push it. We're at the end of the summer. We have a lot of things that the world is hanging on. After having this aftermath of central banks, we don't have that to look forward to for another few weeks. So that being said, all we have is like I said, the Boris going to Europe kind of thing. So is that positive? Well, right now I think euro strength is trying to show itself. Now the interesting thing is the euro may see a little lift here against the dollar. Interesting enough, though, the euro has been turning against the pound. And that's something that I've been watching, and that's why I think that the pound that we've already looked at has a good shot at following through to the upside a little bit, because the pound obviously has been trending lower against the dollar. Well, it's been getting crushed against the euro, especially as of late. And markets tend to go in like they go out. Except for like right here, like this market slid really hard over the past week. I don't think you're going to see a radical rally that correct itself back up here really fast because of the news that's coming out. So we'll see how the reaction to the euro numbers, even as you can see, they had already came out when this chart had been made, and this is not a big range. So they're not reacting to those numbers. They're reacting to the meeting that's going to come out over the next couple of days. And I think that's going to set a tone too. I don't think that Boris is going over there aggressively to just be bad-mouthing or being a bully, but he did put a staunch statement saying that, like I said, we're leaving the 31st of October, and we're coming up on this 1st September deadline. And I think that now we have some clear directional bias for Brexit, which right now will not necessarily be adverse for the euro US dollar, even though it is against the euro pound. But if the euro is decreasing against the pound, that doesn't affect the dollar trade. But if the pound is going up against the dollar, it does help to give the euro a lift. So since we have the pound that's been trending a little bit, it looks like it wants to pressure resistance more. That helps us with this buy signal right here. So the pound and the euro should, or not should, but may have a very good chance at pressuring resistance over the next few sessions and into next week as we wind down the last part of the summer. So right here, let's look at these key levels. I think that right now above the 110.64, which is yesterday's low, the market is definitely looking to pressure the upside into this downward sloping resistance area. This 111.81, I believe, is going to be your cap. I don't think you're going to have anything beyond that. However, if we were to breach this 111.81, that takes out this monthly pivot level, also takes out this downward sloping resistance area, and then has the market probably targeting and settling into this bullish target zone here. This would be, I think, the extreme. You can see I have downward pivoting arrows here at 112.49 and also at 112.80. I really believe you're going to see a cap here. I don't think that there's enough going on in the market right now, even with numbers that are looking to come out over the next few weeks, that could possibly drive the euro US dollar any higher than that bullish target zone. Could it breach this downward sloping resistance? Very well could, but I don't think you're going to take out this 112.49. I think right now we had set a lower move high. Right now, if this bullish signal holds, it's a higher move low. But not necessarily. It could be just the first low before it sets a lower move high. So if the market caps in here, it's very likely that it'll go sideways to lower again. So we're not looking for a major turn in the euro US dollar, just like in the pound US dollar, but we are looking for strength in those two currencies in that trading zone, and weakness in the dollar. Now, we don't have a Swiss, a US dollar Swiss chart up, but that chart has definitely been dollar weakness, and we have Swiss strength that continues into today and into this week. So that being said, with the Swiss, which has been a bull against the dollar for a while, and now with a positive lift, if you will, of some signals. Obviously, we have one signal in this market, as well as a current short-term lift in the pound. We have three major currencies in the EU trade zone that are now aggressively starting or looking to build a posture that may be an aggressive bull coming into the fall, and as we start to move out of the end of the third quarter into the fourth quarter. And I think that come September, going into October, we'll already start to set a new intermediate trend, and then we'll see how that pops and it reacts at October 31st and how we trade into that. So the numbers aren't that big for the EU. We already talked about the euro was the one that had the most numbers coming out over the next 3 days, and as you can see, the reaction on this chart, which was taken just before this webinar, is pretty bleak. There's nothing that's really happened. So volatility has dropped because of FOMC minutes and Jackson Hole. So that's why right now I think the fundamentals are off the table and the technicals right now are kind of ruling the trade, but there's not much there. So for directional traders, you have to weigh your risk reward. So if you, like for instance with this trade, you have some upside potential, but and your risk reward level is the numbers are right. However, because of the FOMC minutes and the other Jackson Hole thing, the momentum may not be strong. This may actually just be a grind higher where it's just not gonna manifest. It's gonna be a positive, but you're not gonna see very much follow through. So that's good for options traders. So for outright Forex and futures traders, I'd say be careful if you're not in the trade. You know your risk levels here, especially like this 110.64 for bulls. And for bears, for sure, a failure here has us leaning back on this 110.26. And failure from there, well then this current trend, which after all, the intermediate trend is down. The trend is your friend. So this is a short-term counter trend trade, and it's very tight in the risk levels, you know. So those are your pivot points, and strike prices to look at too would be definitely something around this 110.64. And for sure right now, I think also for a low risk buy too, and stretching a little bit, you have this 110.26 for risk, but definitely below there, it's very, very negative. And then even here, if we get to this target zone, it's going to probably set into a choppy area and fall off of it. As you can see how the market had consolidated for days over here. It was pretty ugly before we had this last slide. And the momentum is definitely to the downside. So be very cautious with your risk if you're definitely going to play the long side. So we have the inklings of dollar weakness that are coming in from two major currencies. The pound and the euro are the biggest currencies that are out there this next to the US dollar. And if they are truly starting to have a turn, and the euro doesn't need to have a big turn, and neither does the pound for it to impact the US dollar. So with that being said, look at what else we have. We have a short-term reversal signal that happened yesterday in the US dollar Canada. Now we have the one Canadian number. It's a medium level number. So as far as the reaction, you can see today's trading was definitely pretty much on the offer side when this chart was taken a little while ago. And yesterday there was a short-term sell signal. This is a candlestick pattern here. Now this trade has already obviously had quite a move already that has started, at least as of this chart. I don't know where it's at currently. This was done about a half an hour ago. So this is in place, and right now this 133.46 is a big upside downside directional pivot. So the intermediate and short-term trend obviously is bullish here. It has a fairly steep sloping rally that the market's been in for the past month. As you can see though, unlike the euro, which has had very tight ranges for the most part over the past couple months, the US dollar, Canadian dollar has had some nice swing trades and definitely some big volatile days here. Now, right now with the short-term sell signal, we're looking for the market to start to creep down and to test this upward sloping support. And if it can fall through here, I think you're probably going to see it start to digest around this 132.34 level. If the market can get underneath here, then it's probably just going to chop around in the lower part of this target zone. I don't think that 131.83, first of all, if this trend is to maintain itself, this 131.83 should hold. Now, interesting enough, we kind of have a double topping situation here with this current uptrend. Yesterday's high barely took out this high from 2 weeks ago. So we did make a higher move high. So on our basic fundamentals, higher move highs, higher move lows, the trend is your friend. The bulls are still in place. So even if this short-term sell signal is a good signal, it is a short-term sell signal. The overall momentum is to the upside. This should be just a corrective move, which would then be contained in this target zone if it was to continue to slide. And this 131.83 would be the level that would hold. If it obviously if it falls below there, then this would be a very good double topping scenario, and the intermediate trend would then be more neutral, with the short-term trend being bearish. And what would cause that? It would mean that we would have excessive US dollar weakness. So maybe that could happen. We were talking about how the US dollar is starting to wane against the euro and the pound. Probably not going to be excessive with the euro, but a little more action with the pound. But now the Canadian dollar, where the US dollar has been strong against, obviously for the past couple of months, if the dollar is turning and the index starts to turn, that would mean that one of the other major weights, like the Canadian dollar, might start to become stronger against the US dollar because of US dollar weakness. So is US dollar weakness what is starting to drive these markets? I don't know. Right now, because of all the central bank stuff and the FOMC things, minutes that are coming out today and what have you, we know where the central bank posture is. It's very dovish. As far as most of them, they're all kind of working together, so it cancels out, except for when you're talking about the pound, because they're not necessarily jumping on the bandwagon because they have too many other things that are affecting their markets, versus where the euro, where they're trying to save and head off a recessionary environment. And then the Canadian issue is they have some tariff stuff going on with the US, but they've been pretty much kind of, I would say, not silenced, but they're nothing more than murmurs right now. And so dollar weakness could start to come into this trade. So yesterday's high is a very good low risk short-term barrier for bears. Obviously above here the trend is in place, and what upside momentum could we have? Well, we could be up at 134.37 within a couple sessions. So definitely be careful if you're a bear. But if you are a bear and a very aggressive bear, right now you have your good opportunity. And even if you're a long-term bear, this is a really good spot right now as we look for a potential correction down towards this target zone. And if US dollar weakness does start to prevail, now think about this. We talked about the pound. If the pound truly is bottoming and starts to continue further with the short-term uptrend, followed with the euro US dollar short-term rally, that starts to weaken the dollar by the major currencies, which also sets the tone of direction for most currencies against the dollar. That would go in tandem with the short-term reversal signal, and that would also put the US dollar Canada trade looking like it's going to probably come down at least into this target zone here. Now we have to see, and that would come into this near the September 1st deadline, which we have for Brexit, the first one, and this could be beginning of where we start to see a new trend in the dollar, and moving forward with Brexit and things like that, which means that if we're starting to have a positive outlook, meaning that how Brexit, whether it's good or bad, whatever, that's irrelevant, but if it does happen and we can positively say as of Halloween we're going to move forward, however it may be, UK will regain its sovereignty, and then they can figure out everything else as they move forward. That could be a very good trend to see as we move into the third and fourth trade quarter, which would mean dollar weakness, which we should see dollar weakness because of the environment with the interest rates as well. So right now we're looking at a potential very big pivotal point for a couple of your major currencies, your euro, your pound, and as well as our Canadian dollar, which is in our trade zone. So first we looked at the European trade zone. We didn't pull up the Swiss chart, but that also is, that's already been in that case strong against the dollar. So, and now here we have the inklings of dollar weakness versus one of our biggest trading partners and close to home, the Canadian dollar. So with that, let's now move on to our last trade, and we're going to go jump to Asia. So Asia, range trade to lower target area. That's where we're at. We have a bunch of pivots here right now. The market is in a short-term corrective move to the upside. Overall, dollar weakness has definitely been the overall trend with the US dollar yen. So any rallies, we're looking to be corrective. We have heavy resistance that comes up at this 107.669 level, as you can see where the downward sloping resistance is here, where it comes into this pivot. If we were to start to see a continuation of a grinding higher rally, I think this would be where you would see a cap. Definitely the high set over a week ago around 106.97. If we could breach this area, probably going to make a run at this 107.69 area. Then I think you're going to probably the trend is your friend and heavy resistance is in play. If US dollar weakness is the case, like we've talked about in those other currencies, and if that is going on over the next week or two, it's going to be really hard for a rally to get up into this area. So that being said, you're probably going to see the US dollar yen stay in this range trade area or start to lean back on this 106.57 area. This would be after we get through the FOMC minutes and blah, blah, and the Jackson Hole stuff this week. And then moving forward, I think that that's when you're going to start to see a chance of leaning on support again. However, until that period, over the next 3 days, unlike the euro, that looks like we have a little potential buy situation, or the pound situation where there's a potential buy going on there, or the US dollar Canada, where we have a short-term sell signal and looking like a change in direction. This one here is definitely a range trade situation shaping up here. I think that directional traders are kind of in a, their risk reward isn't there. I don't think that a breakout to the upside or downside is worth playing because I think it's just going to be more of the same until there's any really major reaction like another cut in rates by the US Fed. So that being said, range traders, options traders have a good chance at exercise or capitalizing off of these pivots here around 106.057 and then up here around this 106.67 to 106.77 area up here. So around here, here's your upper band, and then here's your lower band where I think the market's going to be contained, especially over the next 3 sessions. And at least until Sunday night, I don't think you're going to start to see a breakout. And even if you do, it's going to be really hard to take out this high that was set a couple weeks ago, or excuse me, a week ago. And if it starts to lean on support again and take out this 106.57 level, the trend is your friend. That means that a lower move high has been put in place and we're looking to go sideways to lower. So overall, we are starting to finally see, after a summer of lots of indecision, the potential for a turn in the dollar. So keep in mind, always look at the dollar index, no matter what currency you're trading. And well, obviously if it's a cross against the dollar, but even when you're trading other exotic crosses. But the thing to pay attention to right now is that Brexit looks like it's on the table, and you're going to start to see some strength in the pound, not necessarily strength in the euro because of what's going on in the EU. I think it's more an of dollar weakness that's starting to show its head. So we'll see how that manifests over the next couple weeks. And right now, remember today the FOMC minutes is big. We have the Jackson Hole Symposium for Thursday, Friday with the Powell speech follow-up on Friday. So the world, as we wind down this week, is ending its summer and kind of drifting. So US dollar yen traders, look for range option type opportunities. Don't look for any type of really directional opportunity. I think the likelihood is very weak. The odds are not there. And for the pound dollar, we could be looking at the beginning of a new trend, or at least a short-term bounce, giving strength as Boris goes to Europe. So who knows? We'll see what happens when how that goes. So very interesting, but it does seem like we are starting to show signs of at least a short-term corrective possibility for the US dollar as we move forward over the next couple weeks, moving into Labor Day and ending our summer. So with that being said, always do your homework, look at the markets, weigh your potential trades, have a plan. So we have a plan for those currencies that we talked about today, and the rest, well, there's not, like I said, there's a lot of people weighing on this FOMC minutes and what have you. So we guys got to deal with it for the rest of the week. Tight trade. Take it easy. It's the end of summer. Enjoy. I'm Teddy Kekstadt from Forex Trading Unlocked. You can always find us at www.forex-trading-unlocked.com. Please like, follow, and share us on Twitch, StockTwix, and LinkedIn, and see what we have going on every day. And good luck with your trading. And also, if you those patterns, those sell signals and buy signals that we talked about, I wrote a book called High Probable Japanese Candlestick Patterns. It's available on Kindle and paperback on Amazon. And if you're an Amazon Prime member, you can just read it like any book, like you just go on and it's part of your monthly fee. So it doesn't, and you don't have to buy it. You can read it anytime you want at your leisure. So thank you very much. You have a great day, and you have a plan for the next few days, because we know it's going to be a little bit tight. And let's see how these buy and sell signals manifest. With that, take care. Have a good day.